Mining Weekly Online is talking to Dr. Mark Bristow, the CEO of Randgold Resources, who has built 5 operations in Africa. And we want to talk to him today about Africa and the challenges there. Are African countries competing more aggressively for long-term mining investment these days?
I think we're seeing a little bit of that. I think there's been a shift. I mean, I think it's normalizing now, and people are appreciating that capital is scarce and scared. And so you need to work to attract it. Now, we've just seen the Ivory Coast work with the mining industry to deliver a very strong, constructive and attractive mining code, best in Africa. And, you know, I think that's the first sign of a real invitation to capital come into the country.
How good has Africa been as an investment destination for a gold miner like Randgold Resources?
Africa offers some huge world-class opportunities, and so the trick was to focus on developing those world-class opportunities that can cope with the risks and costs of doing business in Africa and ensure that all the stakeholders associated with those investments actually can benefit. Because if you're developing, Africa is a very expensive place to operate. It's got no infrastructure, it's got very low capacity. So to be able to invest in it and be able to invest in communities and uplifting people's skills and really developing something where the nation benefits from the national asset, you've got to have a sizable deposit or project. And a lot of people get caught by developing marginal assets in Africa, and they don't work.
How much foreign exchange has Randgold Resources earned for Africa?
We've watched Mali, for instance, become quite important within the Central Bank of West Africa because of its contribution to the balance sheet in the form of foreign earnings. Randgold represents, based on last year's numbers, more than 12% of the GDP of Mali, its operations in Mali. So it's very significant. Almost 1 in 10 people are influenced in some way by our investments in Mali. We're going to produce over 600,000 ounces in Loulo-Gounkoto this year. That's you can do the math. It's and still 200,000 ounces in Marilla. And if you look at Ivory Coast, we're the biggest producers in Ivory Coast in the form of Tongon, and it's struggling still as a business, but it's still very profitable. And I think that's the point: is that it's a 3 million ounce project. It should pay its capital back within 5 years. It's 5-year tax holiday, and it will make a big contribution, and it's already done so in the northern part of the country, which is starved of investment. And the DRC, we're targeting 550,000 ounces there this year, and already you can see the impact that we've made on that northeastern part of the country, which was really an economic desert. As miners, we sometimes forget we're not owners of the mining rights. We're renters. And it's a national asset, and we need to bring it to account for the benefit of the government as custodians of that asset for the people of the country, as well as the communities around those mines that we are developing. And Randgold is very focused on doing that. We employ close on 15,000 people across Africa now, and that's significant. And the knock-on effect, depending on who you listen to, could anything between 10 to 30 times. And I think that the key for us is that we see our contribution, first and foremost, we see our employees as a key stakeholders in our business. And secondly, we prefer locals. So we have what we call national programs. And we want our management to be national. We don't want our management to be expatriate. And for instance, in Mali, we've got 1 expatriate now in the 3 mines management teams. And already in Kibali, we're over 50%. We're well towards, certainly a dominant executive team in Ivory Coast. But the other part of that employment is the relationships we have through local businessmen. So, the knock-on of our dollar is very much higher than many mining companies, because there's a lot of criticism aimed at the mining industry, which accuses us of coming in and really building a wall around, literally some mining companies do that, around their assets, and then bringing in international service providers. So it's like an oasis, and really no one really benefits from that. Certainly the Treasury and Fiscus will if you're profitable, but not the people. We have a completely different philosophy. We will not employ international service providers. If we can't find the appropriate skill in the country, we will then marry them with an international skill, but give the contract to the local guy. And so we really focus on developing that local business so that you can manage, crises like the coup d'etat in Mali and the crisis in Cote d'Ivoire and the ongoing challenges in DRC. We can manage that because we have predominantly national partners.
Even on your periods of leave, you don't leave Africa, and you've just done another 10,000 kilometers.
The fact that you can drive a motorbike unsupported from Abidjan to Cape Town, we did the eastern Cape to Cairo in 2009. We drove through Sudan and places like that, and we did the west coast in 2012. Mauritania and Western Sahara, and those all conflict countries. Mali was in the middle of a crisis. And now if you speak to anyone, they talk about Nigeria and Angola and those countries, it's as well. But we drove through those countries, we worked with the locals, we didn't pay any bribes, we got from A to B within our exact time. We did 10,000 kilometers in 26 days. We had one rest day because I had some business to deal with in Kinshasa. It says something for Africa, and I think I've always said sub-Saharan Africa is awakening. We were always welcome as Africans. We were welcome, you can get from A to B. I think there's a lot of looking and riding on your bike. One thing you need to do is you need to understand Africa. If you speak to anyone who's non-African and told them what we're going to do, they would have said this is a dangerous place in that, but there we are, we've done it.
And then your own company now, you seem to be going into a mode of actually creating value even without growth.
Randgold Resources has always been about delivering returns, and we've had a period of 20 years really of growing the business. And the philosophical question is, do you just want to get bigger and bigger as a gold producer, or do you want to get more profitable? And we've always, as you know, focused on profits. And the point is, at the end of the day, shareholders should get something back. And we've been 7 years now paying dividends, and we are in a position where the forecast suggests that we'll be able to continue to grow those dividends now, and we become a dividend-driven company. If you go back to the gold mines of the yesteryear in South Africa, they were everything a gold investment offers, plus big dividend players, because they were profitable. And the one criticism I have of the industry is that we've seen a massive increase in gold price, and we've never seen any real value created. So Randgold's created that value, and I feel it should be committed to giving some of it back to its shareholders, as well as continue to grow. So if you look at Randgold Resources, the concept of the 10-year plan is to show that we can deliver strong cash flow with limited capital. In other words, everyone always talks about return on capital, return on investment, but no one ever demonstrates it. And the simple way is that if you can generate free cash flow from your projects over a period of time, it means you are making a return on capital after you've paid it back. And so we're very focused on attending to that. At the same time, we need another mine, And the question is, do we want to be a 5 million ounce producer? No, I think between 1 and 2 million ounces is a good number, and we keep the quality of our assets, and then to be a sort of static producer, you would appreciate, we've got to offer strong returns to our shareholders. Otherwise, why invest in the business? So that we want to offer the leverage that our gold and protection, security that gold investment gives you against other investments in your portfolio. And at the same time, if we can, and that's from when I first started, I said, if you can build a gold mine that offers that, and you give your shareholders a return, a yield, isn't that the best of both worlds?
And where will that next mine be?
Well, that's the $1 million, that's the 5 million ounce question, I guess. Yeah, we're going, I leave tomorrow, actually. I'm off back up to Senegal. We start our annual exploration review. We do that every year just before the rains come, as the geologists get to the end of the program, their field programs. And so we're going to review all our projects against our set of filters. We're looking for minimum 5 million ounces, return of 20% at $1,000 gold price. So Senegal, we've got Massawa, which we've certainly fits the 3 million ounce plus mark, and it's a very complex project, very refractory and needs power, and there's no power. So we've got to be innovative of how we're bringing it to account, and we're really focusing on that. And then the brownfields work around Lula and Gounkoto is very exciting, and we've got some extensions to the ore bodies and new targets, and that's been very good to us. That region, that whole region has produced 20 plus million ounces for our company. And we've got we've got some ground north of Papillon, that recent deal with B2 Gold just south of Lula. And then I think the hot spot for us right now is Côte d'Ivoire, and we're very excited about the country and the way it's emerging. It's got very good infrastructure. It's got a very professional bureaucracy with and you can work in that country even from one political regime to the next, and geologically it's completely underexplored. So we've got two particularly attractive permits there, one called Mankona and the other called Fapa, which is just south of Tongon, which we've got some numbers. We've been talking about it for a couple of quarters now. We're going to go and have a look at that. And then I'm keen to, of course, we didn't go into the DRC just to build one mine, so that's what we remind the government all the time. Challenge there is to really, the Congolese are all prejudiced by the copper industry, which has had so many ready-made mines, just needed somebody with money to unlock the value. Whereas gold, you got to find it, and we need access to ground. And slowly we're getting there, I believe, because it's not easy to find gold mines. And then I'm keen to open up some new frontiers in Africa, in addition to our DRC work. And so we've been looking at Kenya and Uganda and then that whole belt. CRR is a bit of a no-go area right now, but there's the other countries in that belt where we're trying to trace out the sort of 2 billion year old rocks, and really think that's. And we always tip our hat towards some of the other continents, seeing if there's anything we're missing. We've played around in Russia. I always say our success is often the things we don't do, and we didn't do anything in Russia, and that's been good for us. But yeah, we're looking. We've been into South America a couple of times. That's more like where we are. We'll keep looking, but I think when you boil it down, culturally we're competitive in Africa, and it's something we feel very comfortable about operating. And then, we built a brand which is very African.
That was Dr. Mark Bristow speaking to Mining Weekly Online.